Greetings, members, one and all of the Salivation Nation. Will silver rise again? Let's explore! Yes, that is the question. We've seen silver kind of just looming here, flirting with $27 and then pulling back a bit. Gold is down a little bit too, but silver is kind of just in that point where it's just kind of hovering there, trying to break out. Some people had suggested that we might see silver go up to $30 soon. Well, it's found some resistance for sure. We're going to take a look at an article here from Kitco News that talks about this. But before we do so, I want to encourage you to please apply a little pressure to the thumbs up button, if you don't mind. It'll turn blue if you press it to help get the word out there and share this video. So I want to very much appreciate that here. But this is coming to us from Richard Baker. I have not seen this name on the commentaries and opinion piece here from Kitco News. He had a commentary, the silver near top. He posted an affirmative answer, and the white metal made a new closing high on August the 10th. The column also presented a technique and criterion for confirming that the top would hold, at least for the near term. That condition was also satisfied, and there have been no new highs for nearly a month. It is now reasonable to ask whether there will be a new high for silver for the remainder of the year or low. As explained below, the same technique applied to recent price action suggests there may indeed be more drama ahead for silver. Gold and silver have already enjoyed an extraordinary year. On an intraday basis, COMEX gold advanced 43% from its mid-March bottom to score an all-time high above the mercurial $2,000 per troy ounce in August. Silver rallied a stunning 154% to make its August high, but of course that's from the unusually and abnormal low of under $12 an ounce. Greater than 3 times performance of the white metal compared to the yellow metal is reminiscent of 2011, when silver made a mad dash at $50 per troy ounce in April of that year. Silver stands on the shoulders of gold when they both reach for the sky, but can easily tumble down a mine shaft when it loses its balance. Boy, isn't that ever so true. But make no mistake, silver got nowhere near the $50 per troy ounce in April. In fact, of 2011, we're way off from that point. The 3-month beta of silver relative to gold rose from less than the unity in mid-May to over 3.0. This implies that silver gains are significantly amplified with respect to its precious metals cousin, as evidenced by the performance from the March lows. The converse is also true. A downturn in gold price could be accompanied by a serious correction for silver. Do recent moves in the beta foreshadowing of silver's fortunes in the coming months? So here's where we take a look at gold to silver ratio stability. Monitoring the stability of the gold to silver ratio is a powerful technique for confirming a ratio and price local extrema. I know a lot of people think that the gold to silver ratio doesn't matter, and in some ways some of these metals could be viewed independently here, but there is a lot going on to this in terms of analysis, technical and otherwise here. But a measure of stability is the volatility of the ratio between over two different time periods. Volatility for this analysis is taken to be the standard deviation of the ratio divided by its mean over a given time expressed as a percent. For gold ratios, I have found 3 to 1 month periods to be useful, and consider volatilities exceeding 4% to represent instability. There's a lot of math involved here, and here he's plotted out here on a graph here the stability x-axis and y-axis results in the stability lambda map connecting the market day-to-day points produces a stability trajectory. This method, lower left quadrant, is a domain of the very stable ratios to the upper right, unstable ratios. The other two quadrants are considered transitional. So very interesting indeed to see how this is happening in these first, second, and third turns here over a given period of time. Major trajectory turns in the unstable quadrant typically occur when ratio and price are near their respective extremum. These highs, lows, generally hold through a period of ratio stabilization, which is typically weeks or months. Major turns are a confirming indicator, anticipatory, coincident, or lagging, but usually within several market days of the high-low period. So figure 1 illustrates 3 examples that have occurred this year. Each extremum and the associated GSR and silver price are given in the table in the bottom right-hand corner. The trajectory starts February 14th during a quiescent time in the very stable quadrant. On March 11th, the World Health Organization declares COVID-19 a pandemic as the trajectory rapidly enters the unstable quadrant, bottom red volatilities at greater than 4%. Silver price makes a low, and the GSR scores a March 18th high, followed by a major turn 3 in market days later, March 23rd. So here we can see that turn there and the 3-month stability there in that projection. The ratio begins to stabilize as it enters the upper left transitional quadrant green arrow, second from the top, and eventually returns to the unstable region. A second major turn occurs June 1st, coincident with a major high and GSR low E2. Restabilization follows, and then it is off to the races again, red top arrow. So here we can see again the red, I don't know where here's the red top arrow here. You see that movement upwards there. By the July Kitco commentary, the trajectory was still in the unstable quadrant and appears to be decelerating to initiate a major turn. That did not happen. The failed turn is indicated by the red dotted ellipse. On August the 10th, a new GSR low and silver price high of $29.26 per ounce occurred, E3, a 1+ market day before the major turn. Yes, that was the closest it got to that $30 there. It is noteworthy that the GSR low in the third extremum is remarkably close to its 10-year average, 70.2 versus 69.5 ounce per ounce. During the March market panic, the ratio hit a peak of 124. In fact, I think it got up to as high as 126 for a brief period of time. Moving down so swiftly means silver rapidly gained relative value compared to gold. This breaks a long-term trend of gold gaining value on silver established from the April 2011 gold to silver ratio, which was at 31. A very bullish indication for the white metal. By Friday's close, the trajectory finds itself in the stable left half pane and decelerating again, blue arrow. So here is what happens next after that. I'm going to let the kitty out just a minute. The kitty's been messing with these bags here. I got to let the kitty out. The kitty is now banned from this area here. Sorry about that. So I've been trying to quiet the kitty down through the recording of this whole video, and it's been a difficult thing. So yeah, you can see these movements. It's been interesting to see these stables to the unstable quadrant here and how they moved out and coming back in from a period of time here, moving back and forth. This is kind of hard to follow here, but I'm going to trust his charting of this, and let's take a look at what these cases here after this move here. So by Friday's close, the trajectory finds itself in the stable left-hand pane and decelerating pane. So here's what could happen next. The short-term stability of the GSR persists for some time in the first case. Presently, the 1-month volatility is almost currency-like at 2%. This will eventually erode the 3-month volatility at 13%, and the direction of the trajectory will slow direct towards the very stable quadrant. In this scenario, it is reasonable to expect no new highs or lows for silver in 2020. So there you go. So that very well could be one case of one way that silver will not rise. For the second case, volatility could return to the precious metals and trajectory re-enters the unstable quadrant for a fourth try at a major turn this year. Silver might plunge to a new low during a market liquidation like March, or just be caught up in a significant market rotation away from the safe havens. Very true. That very well could happen. The third case exhibits a similar trajectory and volatility as case number 2, except gold and silver post new highs. And we can find clues about which of these three cases is more likely to examine the silver to gold beta. And this is where it kind of gets into some of these trending and predictive analysis. The silver to gold beta tells you the new gains or losses in silver related to gains and losses in gold. You prefer a high beta, a greater than 1.0, then gold rallies. For example, a beta of 2 implies a 1% bump in gold price should yield a 2% jump for silver. Beta is a product of correlation and volatility. The silver to gold beta is a correlation of silver and gold times the relative volatility over a given time period. Typically, silver and gold move together in price, so their correlation is positive and near 1.0. For this precious metals pair, beta is therefore mostly a measure of comparative volatility. It's kind of hard to follow, and it's kind of hard to follow the previous and where he charted that too. But here's an example, though. On August 10th, when silver made its high, the correlation of silver to gold was 0.96 on a 1-month basis. The silver volatility over the same period was a high of 13%, and gold a lower 5%. Silver was therefore 2.6 times more volatile than gold. Multiplying that number by the correlation results in a beta of plus 2.5. In other words, a 1% move in gold yields a 2.5% increase in silver based on a 1-month daily price record. The 3 months beta on that date was also a high of 2.8. Since GSR stability is also related to volatility over similar time periods, it is reasonable to expect that portions of the beta and ratio stability are closely related. Figure 2 illustrates that relation in plotting the percentage change in the GSR y-axis to a percentage of change in gold price x-axis given a range of betas 0 to 8. The figure 2 inset summarizes the relative equation set. So this is definitely high-level math here. Stuff I really don't grasp or digest very well. But this is important to go over because it gives you some insight into technical analysis, although I think this is a little bit different than the regular technical analysis stuff that I've heard of, for sure. You're not going to get that Fibonacci curve or whatever and trend line analysis, candlestick stuff here. So the gold to silver ratio sensitivity and potential for instability. If beta is 1, trace blue, there it is, then there is no change in the GSR, the gold to silver ratio. The percentage price change in gold and silver are equal. This is the most stable condition for the ratio. For betas less than 1, the GSR increases over with a positive change in gold out by a smaller absolute amount. If silver loses value to gold, for example, a beta of 0.5, yellow trace, shows a 1% change in gold results in a 0.5% change in ratios. You can see there's the yellow line there moving up. The GSR ratio is increasingly more sensitive to changes in gold price for betas greater than 1 and thereby has an increasing potential for instability. For this condition, the GSR decreases with a positive change in gold, which is silver gains value on gold and the percentage decrease grows with increasing beta. For example, a plus 1% change in gold produces a 3% decline in ratio for beta, a 4 gray trace, and a 6.5% beta, which is 8 in green trace. Here we can see the gray and green there. You see the change in the GSR is going to be negative 10% in those cases, or, in due course in time. The August 10th example shows one such case where the GSR stability trajectory was so far in the unstable quadrant in figure 1. So the gold to silver beta map, silver to gold beta map is, since beta is a good indication of ratio stability, the silver to gold beta map is helpful in assessing stability direction, which is improving decay stability. Figure 3 is such a map, plotting a 3 versus a 1 month beta. From July 7th to last Friday's close. Here we can see this silver to gold beta movement here. It's just wild to think of here. And again, you see the increasing potential for ratio instability. That beta number increases, you can see here. And we saw these beta points plotted out on this from July 22nd when the beta was over 4 and over 3 there. So the third figure is silver to gold beta map. On July 7th, the trajectory for figure 1 quickly moved from the stable left-hand pane to the unstable quadrant. In figure 3, we note that the change is coincident with rapidly increasing beta to a peak in both bases in July 22nd. Beta declines some as silver makes its high in August 10th, following by the third major turn on August the 11th. As previously noted, the stability trajectory returns to the stable LHP as a short-term beta briefly falls below 1. Importantly, the beta trajectory is now pointed towards the increasing short and longer-term betas greater than 1. Finally, will silver rise again? We can now assess the 3 cases given the above analysis. If short-term GSR stability persists in case 1, COMEX gold will remain in a trading range as headlined ebb and flow with the coming presidential election. The limits of that range are the highs and lows since mid-August 2025 for gold to 1874 per ounce. In this case, a 1-month silver to gold beta remains near 1, and the GSR is accordingly stable and holds close to the 1% average or above 72 ounce per ounce. Applying that number to the gold range gives a high-low range of silver at 28.1 and 26 per ounce. Presently, this is the most likely case, as suggested by figure 3, which shows a migration away from the beta equals 1.0 as noted. The stability trajectory for figure 1 is also showing early signs of deceleration and turn back to the unstable quadrant. This suggestive volatility will return to precious metals and an increasing potential for ratio instability, the necessary environment for new lows or highs. Whether this manifests in case 1 or 2, or cases 2 or cases 3, which is highs and lows, depends on the outlook for the remainder of the year. For instance, implementing a safe and efficacious vaccine before the end of the year could spark a significant rotation away from safe haven, pressuring gold and silver and break below the ranges given for case number 1. It's a 10% correction from gold's all-time closing high puts prices at the mid-1800 territory. There's a July support of 1820. Since this could likely support a new beta territory, silver could fare far worse. 30% downdraft from the August closing high, still above $20. Greater than that brings prices to the June support around $17. Revisiting a March low would probably require liquidation associated with a financial crisis, a quite unlikely scenario for 2020. I agree with that. If case 3 is the most I believe case 3 to be the most likely scenario, says the author here. Gold and silver prices will rise again before the new year. The current environment favors this choice. There remains plenty of domestic and geopolitical uncertainty, support safe havens, U.S. elections, installed recovery package in Congress, a stubbornly pervasive COVID-19 virus, civil unrest and escalating U.S.-China tensions. The fortunes of the U.S. dollar grow dimmer with the expected Federal Reserve and U.S. Treasury largesse, and 3 negative U.S. benchmark rates. Real rates continue. A bullish for non-interest earning assets like gold and silver. For gold, the 2011 record forward in time by inflation is a reasonable target of about $2,200 per ounce. We talked about that before. The GSR will likely fall back to the 10-year average 69.5 or lower. Applying the average to the gold target results in a silver price of $32 per ounce. The inflation-adjusted silver price high of 2011 is 57, which I believe is a bridge too far for 2020. I agree with that. You know, Thank you for putting up with this long video on this, but this is important to go through. Why? Because this guy is essentially quantifying that which is not normally measured by technical analysis, which you can kind of throw out the window. And even to some extent, it could still be the case, but he is measuring it based off this technical analysis that he's done. I don't know how often this is used in technical analysis, but this gives some predictability analysis based off of real data and case studies for this year. So I find it quite fascinating. I'm not a math guy, and somebody like probably Blaine P or somebody that is more minded like this could prove to be helpful. But for the rest of us, this gives us some insight, some predictive analysis for what could happen in the 3 different scenarios, likely if they were to play out, and more likely they'll be somewhere in the range of those 3. So best case scenario, $2,200 for gold, and $32 for silver. And that's probably the most well-reasoned analysis that I can find on a technical level, that implies also the psychological levels that we'll probably be dealing with unrest. But it could still be thrown out the window, and they could go much higher, I think, given it depends on how much civil unrest there is. More on that on a future video. But there it is. Thank you again for watching this video and for putting up with the long-windedness of this, but I do find it fascinating indeed. And this type of thing doesn't usually do that for me. So there you go. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.